into this name. Indiabulls Housing Finance was also a great set of numbers. It's up 3.5%, not exactly at the day's high, but still quite strong. But this is one name which has not fallen at all, so maybe that's the reason why essentially markets may be just giving it a 3% reward. Gagan Banga from Indiabulls Housing Finance is now joining us. Gagan, firstly, congratulations on a great set of numbers. Can you just talk to us about the credit demand? What essentially happened in the quarter, and how is the demand looking?
So our disbursements have grown by about 6,200 crores, and we continue to see reasonable growth in that. One would be optimistic about continuing to grow the 6,200 crore number, and as we grow this number, we expect that the segment that we focus on, which is 15 to 75 lakh of rupees, that segment will grow. The gloom and doom that you hear about in the real estate market is more around the premium end of the market, which is home loans or homes of 5 to 10 crore of rupees. That segment is clearly not witnessing a lot of growth, but the more affordable segment, in which people actually move from rented houses to staying in own houses, is benefiting from the reduction in interest rates. It's benefiting from the tax stops which the government has given, which has brought down the overall ownership cost and the overall mortgage cost. And my sense is that in the foreseeable future, this segment will continue to grow.
What were the spreads in the quarter? Asset quality continued to be less than 1%?
Spreads have been stable at 320 basis points. We had guided at the start of the year that our spreads will be in the range of 300 to 325 bips. They are at the higher end of the range, even as we have done more and more of home loans. Credit quality also has been stable, so we have been guiding that we will be maintaining gross NPLs in the range of 70 to 90 basis points, net NPLs in the range of 30 to 50 basis points. Gross NPLs have actually come off year on year by about 3 basis points. Net NPLs are flat. So my sense is that we should be operating at gross and net NPL numbers very close to where they are in the foreseeable future. And our credit costs are down by 5 basis points year on year. And that's a trend that one should see over the next 2 years. So credit costs should also continue to come off.
Right. What would be the outlook going forward as far as growth is concerned? Would you continue to maintain 20-25% growth?
Less from government policy initiatives, though they will play out over the next 3 to 5 years. More from recent activity of around 40 million square feet of office space getting leased in the last 12 months, and office availability being at 5-year lows. One is very confident that as this 40 million square feet gets occupied, for every 100 square feet, 1,000 square feet of home space needs to be also occupied for a family to stay in, and that should give a lot of momentum in the market segment that we operate in. And longer term, definitely what the government is trying to do, both in terms of easing supply as well as reducing the cost of mortgage loans, both of those should complement the growth.
Right. What essentially is your outlook on the rates going ahead? We've seen a good rate cut this particular year that we've seen. Do you expect a pause for now?
No, we won't, on our own be considering a rate cut. There are essentially two triggers. One could be an RBI action. The other is that the entire base rate regime will change in April. So we will wait for that to happen before taking any further rate action.
Right. Gagan, thank you so much for taking out time for us, and congratulations on a great set of numbers. That's Indiabulls Housing Finance giving a positive outlook. Markets are now just up about 20.